Good morning, everyone. It is Monday, June 21st, and I have a little confession to make here. My E-Trade, that's what I trade out of, the option chains are not filling up quite right. So I am doing my watch list without the benefit of actually being able to look at the option chain. So what does that mean for you? I'm going to give you an idea of where I believe the strike price should, like where I would go, but really check that volume and open interest. So the open interest are orders that have yet to be executed. Those are open orders waiting. Volume is what happens today. Not all volume becomes open interest. Keep that in mind. So if you see, especially a lot of these like the meme stocks that trade just ridiculous amounts of volume, but the next day you're like, wait a minute, why is the open interest not higher? Because those are orders that have opened and closed, so they're not outstanding orders. So remember that open orders are outstanding orders that have yet to be filled. Okay, taking a look here at the ES, I'm going to compare this to the SPY, right? Because it looks different because of the way the ES trades. Here is the SPY. We had this big gap down, and we talked about this on Friday quite a bit because we gapped down and then couldn't come back up over the 50. So now we have this gap to fill. Keep in mind that we also have this gap down here to fill, and that gap will start down here at 411.67 and will be filled at 411.05. So not a huge gap, but all gaps should be minded. And I wanted to point that out here because although this morning we're coming right back up, we're moving ourselves right back up here. It is an interesting place to be, right? We've hit the 50 before and moved back up. We had bigger volume here, was not in love with that climbing volume on the way down. So I think this is just a good time to be very cautious. Maybe change your stops so they're a little bit closer, or even with as quickly as sectors rotate around. You mean tech one day, and then it's the next day that energy is on top, or the financials are on top, or basic materials are on top. It is so fast that swing trading is very hard. If you're finding it hard to enter a swing and be able to stay in it for several weeks, it's not you. Well, I mean, I don't think it's you. I'm saying the market is lending itself to that, I guess is where I'm trying to land on that. And so it's not always you. Maybe your picks are just right, but they only work for that day because we don't get that follow through. So that's actually just the entirety of the market right now. And the sectors, if you go and pull up the sectors and look at them, they are very red. They were very red on Friday. Now today's going to look like a bit different of a picture because again, as I said, when we come back here and look at the futures chart, of course, you don't see that gap, but you see that we are pushing right back up here to the 50, and this longer term trend line, right? That all kind of came together. We have our point of control of volume just up ahead. Today's going to be a pretty interesting day, and I would just be cautious about what you add, or if something is failing and you're like, well, I'll just give it one more day, really think about where we are here in this chart. Now, we'll take a look at it as the day progresses. The first hour of trading, I'm just going to kind of slough off as, maybe just a run back up. But I want to be very cautious here about adding anything long today. I want to see where these markets really go. We've been under a lot of pressure. There's a lot of analysts talking about the housing market. So it's a very messy, very, very messy. So that's the SPY chart. Now that being said, there are a few good charts out here that I like that we were watching on Friday. Friday has been kind of a habit now. At the last hour of the day, we come in and kind of look at what's moving through the day and what's giving us good volume. And this was very, just completely disregarded what was going on in the market. So Billy here, we really like this. We talked about it before as well, as it kind of came back here to the, the 3 and the 8 on top of each other. But here, I like this. We drew in this trend line last week, and I really like it here above the 119. Now, it's sitting at 118 right now, so I want to see it continue to push up. The volume was really nice here. I like the look of Billy. And again, I don't really have a good look on options, but I always like to go right near the money. I would say around 120 is the strike price that I would choose. All right, so the next one we're going to take a look at, and again, a lot of these were from Friday, Snap. So Snap, really quite the roller coaster ride. However, I would say that maybe we had just put in an inverse head and shoulders, and we'll see if we can break up above this. You can see the very heavy resistance right along that fib line at 63.20. I like the Snap 65s here, and I like it actually over 64.30 is where I would look to take a long entry on Snap. Snap right now is trading at 63.30. So it has about $1 more in there before I would take a look at it. Stone. Finally over the 200 here. Again, another one that we took a look at here on Friday. I like the look of Stone. I'm going to draw in a short-term trend line. For as long as we stay over this 200 and start pushing up, keep in mind this shorter-term trend line here. Coming over that trend line, though, is going to bring us up over a lot of other resistance as well. So a really good entry there might be, oh, that's not what I wanted to do. I'll tell you what, these lines, man, they're kicking my butt. So somewhere right along this 70-40, right? You see that kind of all comes to intersect here together. That brings us up over the volume from back here. So right around 70-40 would be a nice place to go long. And then we have all of this open space without any volume resistance until we get up here to about the 79.30. So I like STNE. Joe's snow, we have to look at snow. This has not been yellow snow, although a little bit more difficult to trade as we talk about it with Joe most days. We had pretty decent volume here, but look at this. We had all of these moving averages really close. We use this point of control coming right up here to this trend line. So anything over 250 is where I like snow. And again, this is another one that does not have a lot of resistance directly up ahead. 267 would be about the next set of resistance. And on this, I would look at those 250 strikes. Pinterest. Pins. I would really prefer if we get a little bit of a pullback here in pins to come right back to this 73.30. That would have been the optimal entry. That being said, look at all of the room we have here over 74.25. So if we get a little bit of a pullback, I would like it a little bit better around that 73.30. However, if we continue and move on, over 74.40 would be the entry I would look for there, and probably the 75 or the 80 strikes. Like probably 75, as long as they have them. Now, Roku. A lot of talk about Roku and Netflix last week. So I do see this shorter term resistance that comes in. See, look at that, right at the fib line here. However, when Roku decides it wants to move, it can move huge, right? It's sitting at 367.13 right now, so just inside this candle. I would play this up to the trend line. I know it doesn't look very far. However, that is up to 380, so that is a good $12, $13 move, or $13 to $14 move in there, coming off of the close from Friday. So take a look at Roku. And again, on those strikes, I always stay within like either right at the money or within a strike or so. Probably the 370s is where I would look. And then a meme stock. This is the same one that we had last week, I think both Thursday and Friday. I love this wedge that it has. So I've drawn in two. It has this larger one, but now we've started putting in this smaller one based off of this bullish gap that we had. I like the look of this coming up above this trend line. Now I know that I kind of cut off the wicks there a little bit, and I did that on purpose to really show where that price action was coming in. I actually really like AMC as long as it's over 61, and the next resistance there right around 60, or like release of volume at 65. Let me see where it's trading this morning. It's at 61.80. So right up above this trend line. Like the look of AMC for a meme play here today. And these, again, if you can't play them with shares, be sure to take your options so that you don't panic as soon as you get in. If you're going to be playing this Friday's expiration on these, you're probably going to make yourself sweat a little bit unless it's something you're really used to. Give yourself the time on them. Personally, I think they're a little bit better to play with equity. However, at over $50 a share here, I can see that would be very difficult for some. So give yourself some time on those options. Make sure that your delta and theta are in line with one another. You don't want your decay to just eat up that delta as you sit there and wait for it to make a move. And make sure to have your stop before you get in. Know exactly where it is you want to get out, both to the top and downside. All right, that is it for me today. I hope you have a fantastic day. Sorry about the options chain issue, but we'll get it worked out. And I will see you in the chat room. If you have any questions, reach out, heatherc@givingtreetrading.com.